Usually what happens when we come towards the Diwali season, we see a lot of people coming out with their top Diwali picks, or also known as Samvat picks, right? So I also do a lot of tracking of who's giving what kind of picks, and we look at a lot of fund houses and what different type of picks that the fund houses gives as well. So this time I thought we'll do something better, because every time I see the PDF or the report that comes out from fund houses, I have no idea what that person or what the analyst was actually thinking before they chose the 10 companies. So this time what we did is we reached out to HDFC Securities and they released their own 10 picks. So I said, you know what, let's try to get the expert on the show who can talk about these 10 picks and how the performance went. How did the last year's 10 picks do? And how did the entire process go? So today, welcome to a very special Diwali episode called Money Fest, which is brought to you by HDFC Sky. So for today's episode, I have got a very special guest, a guest who is the Deputy Head of Retail Research at HDFC Securities, Mr. Devarsh Vakil, for this podcast, who will go through the entire Samvat picks with us. So Devarsh, thanks a lot for taking out some time to educate our viewers on how you actually pick the Samvat picks in your entire organization.
Yeah, hi Shashank. Pleasure to be here.
So, Devers, what I want to do is for the audience so that they start learning really better and they know how to analyze companies, I want to quickly go through the last year's 10 picks. And after we go through the last year's 10 picks, I want to quickly understand what your current year 10 picks are and what is the rationale, what is the thought process you had, so that we can also upgrade ourselves and understand better. Is that okay?
Wonderful. Let's do.
So today we have the top Diwali picks on Samvat 2081. And first of all, I want to ask you, Devarsh, what is Samvat and what is 2081? Why this year?
Right, Shashank. So, according to the popular tradition, King Vikramaditya of Ujjain, he established this Vikram Samvat era when he defeated the Sakas. So, Samvat is basically a Sanskrit word. Samvatsara is the proper word now, and Sam means together, and I think Vatsara means the year. So from there we have got this word Samvat. And Vikram Samvati's calendar is usually 57 years behind the Gregorian calendar. So right now we are in 2024. If we add 57, we get 2081.
Very interesting. Okay, wonderful. So now let's quickly look at your last year's picks, because I think that is a very good benchmark of your performance, right? So I can see here, you want to quickly run through this? This is, I think, your last 10 picks, right? Last year's 10 picks.
So all 10, obviously markets were very buoyant, but all 10 stocks did wonderfully well. They worked like a charm. All stocks achieved their intended target. And if somebody were to hold them till their highs, we have given an average performance of 69%, all these 10 stocks, compared to a benchmark, the Nifty's return of about 37%. So last year, all these 10 stocks worked out wonderfully for us.
This is very interesting because what I can see here is that most of these companies are large and mid cap, right? So this is a fairly diversified portfolio and in the large and mid cap space, and you still managed to get approximately 69%. So that is something that is very interesting over here. Okay, so now I want to know how you guys did this, right? So I want to get into the point where what is your 10 picks of this year, and mainly, Devers, in this entire conversation, I want to understand what goes on in your head when you decide something, right? Before that, what is your view of the market? Because I know the market has been very volatile right now, and a lot of concerns are going on in the market with a lot of DIIs, FIs, but that is just the news that we get. So what is your take on today's market?
Right. So we think that this year is going to be a year of consolidation. See, we had last 4 years from the pandemic lows, a stellar run in the market. And we also had a corporate earning growth of about 24% and a lot of money from retail investors getting into the market. As you know, domestic institutional investors have been heavily buying into this market. So our take is that the Indian markets have reached a level where the indices are little richly valued. There are short-term headwinds. Couple of headwinds, like there is an election in US, and depending upon who becomes the next president of United States, that will have an impact on various measures like fiscal measures, government policies. So that will impact our markets. A lot of money is leaving right now India and Japan and moving to countries like China because they have given a very large stimulus to prop up that market. So right now, markets are a little bit into consolidation phase. Over the longer term, India has a very vibrant growth story. We have good demographic, so demographic advantage is there. We have a digital economy, thriving entrepreneurial systems, and there are compelling opportunities in a stock specific, sector specific segments. So I think as we become more and more prosperous, India's weight in the global indices are increasing, and a lot of money is waiting on the sideline, which will come into India, which will help bottom up stock pickers and a nuanced investors who is looking to do a little bit of work behind the stocks. So across the board gains may not be there this year, but if you pick well, I believe there is still money to be made in this market.
So we'll have to look at deep value stocks with positive growth triggers. Is that correct?
Correct. Exactly. That is the theme which we have chosen. Rather than looking at momentum or growth stocks, we have tried to pick 10 stocks where there is limited downside. So there is deep value. And if some of the triggers which we think fructifies, then we will have superior returns out of these stocks.
Wonderful. Let's get into it then. Let's get into it. Let's look at the stock number one. So the stock number one is Bank of India, and you have given a target of 132 by next Diwali, and the buy range anywhere between 90 to 106. So why Bank of India, and what are the growth triggers of this company?
So, as our viewers know, it is the sixth largest public sector bank. It is one of the most attractively valued, deep value PSU banks. And Shashank, as you know, many of the PSU banks were struggling with the non performing assets. The loan which banks gave, they were not coming back. Now, this Bank of India has already written off about 40,000 crores of loan. And what they are expecting this year, that about 5% of that money will be coming back from that non-performing asset kitty. So about 2,000 crore is recoveries compared to the addition to NPA. We are expecting that about 2,000 crore of extra write back will come into this bank, which makes it very attractive. Apart from that, normal fundamentals like they are expecting good growth in the loan, they have a capital adequacy to increase their loan book, and it is very attractively valued, only 0.6 times book value, so which is comparatively quite cheaper compared to the other public sector banks. So that's why we have chosen Bank of India as one of our picks.
Yeah, very interesting. It has almost 25 to 30% target given, right?
Yeah, so one thing which I want to highlight is that this time we have given the range, buy range, because we don't want investors to rush in to the markets now. So buy one half of the money which you allocate to this stock now, and we have also given a lower range. So when the stock comes down to that level, you can average and try to increase the chances of profit by averaging your entry. So that's why you see the buying range in all these stocks.
No, and because the market is consolidating a bit, you can get a good average while investing. Small question on this Bank of India. You said that we will be getting a lot of recoveries, which is almost 2,000 crores of recoveries, right? Is that spread across the year, or is that something we will see happening in the next quarter, or maybe the next to next quarter?
So that kind of granular guidance the management has not given, but management has indicated that out of these by 40,000 crore of return of accounts, they are expecting to recover about 5%. So that's why we have chosen the number 2,000 crore, which can come anytime. So some of the loans may come back in the second quarter, this quarter. Some may come into other two quarters. So we'll see how it progresses. We'll keep a tab on it, but it is expected that about 2,000 crore of recoveries are expected out of this bank.
Awesome. Let's go into stock number two, JK Lakshmi Cement. Buy range is 738 to 819, and the target by next Diwali is approximately 936, which is again approximately 10 to 15% target on this, correct?
Right. So, as we know, this cement sector is consolidating. The smaller players are being snapped up by the larger players. So, here is the player who is already there in the north, west, and east of India, and they are basically at about 16 MTPA capacity, and they have a plan to increase this capacity by 33. So, almost doubling their capacity by FY30. So huge growth is expected to come out of this cement company, and this mid-sized company can become a large company by FY23. Again, it is attractively valued at about 15 times earnings. So we thought this can actually go to about 18 times by next year, and that's why we have given a target of 936.
Very interesting, because this is actually a company which has around 9,000 to 10,000 crore market cap range, and it is sitting at, as you said, 15 to 18 PE right now. Not in the forward P, right? So forward P would be more attractive if you look at it from a long-term growth story perspective.
No, so Shashank, it is our expectation of FY26, 15 times FY26. We are expecting
Okay,
it to move to 18 times FY26. That's our
wonderful.
target based on that.
Understood.
So it's a 1 year forward earning expectation.
Okay, and will I mean JK Lakshmi Cement, is the demand in the space for construction and cement and aggressive infrastructure, is that also one of the reasons that you see a growth trigger might play out with the capex that they've done?
So right now, cement is going through actually a lean patch. The prices have been soft. So what we are
Yes.
expecting that because of the election and because of the government's preoccupation with others, they had not done the capital expenditure. Second half, we are expecting huge amount of orders to go into the infrastructure space. That means these cement companies will be able to increase their prices, and that's why this earning growth will happen. Here is the company which is there in the three large markets of India. So whether it is north, west, or east, it has presence. So anywhere growth happens, this is likely to be one of the beneficiaries. That's why we have chosen this one.
Wonderful. So that would be a very good trigger. Okay, understood. Superb. Going to stock number three, we have Jyoti Labs, 480 buy range, 480 to 533 at an average target of 600 by next Diwali, right? So why Jyoti Labs?
So Jyoti Lab is one of the cheapest FMCG companies we have right now. It's very attractively valued. See, we had a normal monsoon, and last 2 years, all these FMCG companies were struggling for volume growth. Now we are expecting that this year it could be a good volume growth for FMCG companies. Now this company, as we know, it has one of the leading brands into Ujala, and that is gaining a lot of market share. And
Yeah.
slowly, all these other brands like Henko, Prill, Margo, all are gradually getting a lot of market share. And this company has basically undergone a substantial transformation. Earlier, it was a South India based single product promoter driven company. From that, now they have become a professionally managed multi product national company, and it is growing quite rapidly. Last, where most of the FMCG companies are struggling for a volume growth, from FY20 to FY24, they have already shown a growth of about 13%. So this company is able to gain the market share in a lean time. Now, when the growth will come in, we expect that the earnings will also shoot up, and that will help the share prices to move higher.
Yes, very, very interesting. I was just looking at Jyoti Labs as well while you were talking about it. So they have shown very good performance in the last few years, good cash flow as well, and good reserves on their balance sheet also. So I think, yes, that is very, very, very interesting on Jyoti Labs. Okay. We have the next company, which is in the finance space. I love how you have diversified everything. This is just nice. L&T Finance, 150 to 170, and the buy target, I mean, the next Diwali target is almost 219, which is a very good, I mean, very high target, right? So why L&T Finance?
So among the all these sectors, I think banking and finance, this is the sector where we are relatively more bullish this year. So as you see the 10 stocks list, you will realize that we have four stocks from banking and finance. So 40% of the weightage we have given to this sector. So that's one. We think that relatively compared to other parts of the market, this segment is relatively attractively valued. Now coming to L&T Finance, this company is also going through a transformation. Earlier it was a wholesale lending business. Now they are transforming themselves into a aggressively into diversified retail financing. So the whole transformation journey is over, and now we are expecting growth to pick up on the retail financing side. They have already had a huge 90,000 crore total loan book. Most of them was in wholesale. Aggressively now they have expanded into retail segment. As you become a retail financier, you get better valuation, and I think this is the year where the transformation is over and they will start attracting higher valuation. L&T Group, we know it's a large group, a subsidiary of a large established group, so capital will not be an issue. Capital is a raw material for companies, finance companies, and when you have a reputed brand, whenever you go to the market, you will get money at a attractive valuations, attractive rates. So that's why L&T Finance we are preferring, and we are valuing it about two times next year. That's why the 219 is the target. Two times adjusted book value is our target for this company.
Okay, awesome. Let's go to the next one. National Aluminium Company, 198 to 220 and 270 target by next Diwali.
Right.
Okay.
So National Aluminium, or NALCO as it is popularly known in the market, it is one of the lowest cost producer of alumina globally. and we know that China is giving stimulus to their economy. They are trying to revive the economy. Now, China is the biggest consumer of commodities. And what has happened, in particularly in aluminium, is that many countries have actually banned export to China. And that's why alumina prices across the globe has gone up. Now, right now, China is importing alumina from as far as Australia or even Africa, Guinea from Africa. That's why the freight costs are high, and that's why they are getting it at a very high cost. Compared to that, here is the company who is the lowest cost producer of alumina globally. It has an integrated operation, and they are expanding their alumina refinery. So their one TPA refinery, they are bringing it, expanding it to 2.2. This is the fifth stream. They are adding to their existing alumina refinery, and that's why higher metal prices along with the higher volume is likely to generate a lot of growth for this company, and that's why we have chosen National Aluminum as one of the stocks. There we are expecting about 32% EBITDA and about 30% growth in profit for next 2 years. So high growth is going to come into this company, and that's why it is relatively very attractively valued by market. Market is now getting the gist of this news, and they are discounting it. It is available at 13 times, and we are targeting that it can go to 20, 15 times, and that's why 270 is our target for this company.
Wonderful, wonderful. And I also see that it has done well in the last 1 year as well. And the stimulus that you talk about has just happened like few weeks ago, few months ago, right? And they also came up with another stimulus package. So very interesting. With a lot of inflow coming in, money will be spent, and if they are importing a lot of aluminium, then this becomes a direct growth trigger for a beneficiary. Wonderful, superb. I love the learning. Thanks, Devarsh. Let's go to the next one. This is a lot of good learning. Naveen Florin, this was the darling of the stock market at one point. I'm not sure about it as of today, but the buy range is 3059 3396, and the target is 3948. Yes, Naveen Florin.
So Navin Froni is one of the largest specialty fluorochemical companies of the India, and as you know, it is one of the darlings of previous chemical boom. Now
Yes.
that sector has gone through a lot of pain, and now management is expecting that the recovery of the margin will start in FY25. We expected about 23% growth in the revenue from their new segments, which they have gone into CDMO and other specialty chemical segment, HPP segment. That's their good growth is going to come. They have the complete suite, about 60 fluorinated compounds, which finds applications in various industries, whether it is pharmaceutical, aluminium, refrigeration, metal. So all these sectors, underlying economic sectors, are going to go experience growth, and this company is well positioned to supply to them. It is available at a relatively attractive valuation, and that's why we have chosen as one of the largest specialty fluorochemical companies of the India. We think that the cyclical bottom has been made in chemical stocks. So one of the stocks from the chemical space, we have chosen this one.
And is there a very strong growth triggers on the chemical sector revival? Because that is something that has been doing well. We recently saw with SRF results were also not very attractive. So is there some boost coming?
So chemicals had a one of the problems was when China's economy was not doing well. Many Chinese companies were dumping chemicals into many parts of the world, and that's
Yeah.
why chemical prices were down, and that's why this company also had suffered a lot of loss in its margin. Now management is confident that the recovery in EBITDA margin, and they are expecting that the margin will go back to 25% in this year. That is
Wow.
the trigger why we have chosen Naveen Fluorine.
Super, super. I'm also going to start reading about this because I know they're one of the good companies in the space, very good moats, very good management, everything, and the industry was in a bad zone till now. Okay, wonderful. The next company is in construction, which is NCC, 273 to 300, and the target is 363, almost around 20% target. Yes.
Right. So NCC or Nagarjuna Construction Company, it is one of the prominent players in the construction and infrastructure space. Lot of new orders from South India has gone into this company. It has about 2.5 times its current revenue, almost 52,000 crore of order book across various segments, not one segment, across building, mining, railway, water, environment, and all these different segments gives it visibility of earnings for next 2 3 years. So very high, all-time high order book, and the lineup for execution will be ramped up, and it has one of the strong balance sheet in the segment. That's why we are expecting about 20% growth in its EBITDA and about 40% growth in its profit from FY24 to FY26. So very high growth is expected out of this company. Of about 39-40% PAT growth is expected over the next 2 years, while this company is available at about 18 times next year earnings. So compared to the growth potential, we find this company attractive, and that's why we have chosen from this segment. As you mentioned in the beginning, we try to pick 10 stocks from different segments, different geographies, where if something were to happen to one sector or one geography, we will not be affected as a portfolio of these 10
Yeah.
stocks. That's why we have chosen NCC as one of the stocks in this basket.
Wonderful. Okay, that's very interesting. Going to the next one, we have PNB Housing Finance. Oh, okay. 893 to 991 and 1160 by next Diwali.
Right. So, as the name suggests, it's a housing finance company. Punjab National Bank is the promoter. So, like L&T Finance, a strong promoter gives visibility of the raw material, which is the loans. This company is also has suggested or guided that about 18% growth in its loan book is going to happen. There also very strong ROA. Again, the business is there in the retail loan segment, non-resident property loans, individual home loans, both retail and corporate sides. So diversified revenue mix and good growth available at about attractive valuation about 2 times. So that's why, and as I mentioned earlier, we are actually particularly bullish about the finance as an industry. Why? Because we think that the see US has already started cutting interest rates. We expect that next year in the first quarter we will also start Reserve Bank of India, as we have the handle over the inflation, we will also start cutting the interest rates. And as the interest rate will be cut, the loans will become cheaper. And when loans become cheaper, it will these companies like housing finance companies will get volume growth, because as the EMI becomes lower, people will apply for more loans and growth will come. And that's why we are trying to position ourselves before the head of the curve, and that's why we are getting into finance sector in a big way by recommending 4 stocks here.
And PNB, one question I had, they also had a lot of NPA and GNPA, right? Which is bad loans. Have they recovered that or solved that issue? Earlier they had that problem.
So they had a fraud and they had a lot of issues, and it took them 4 years to clean up the book. And now things have cleaned up, and now it is available at an attractive entry point, and hopefully they will be able to deliver this growth which is there in front of them. And if they execute well, we will have good returns out of this company.
Wonderful. Superb. Okay, next is the biggest company in India, Reliance Industries. 24472716 is the target. Yes.
So, largest private sector company, as you know, we have actually picked Reliance last year also, and it went up to as high as very high 3700 odd levels, and now it has corrected. It has announced corporate actions also. So, Reliance is a very interesting company, and why we have chosen it again, because over the last year they have taken the cash flow from their traditional businesses and chose to invest in the sectors of the future. So apart from their retail segment where they are expanding, their telecom segment where they are expanding quite heavily, we all know about it. They have taken their cash flows from oil and gas, and they are investing heavily into a battery, the gigafactory, the green hydrogen project, and other sectors of future. So not only retail, telecom, oil and gas, and future non-conventional energy sector also they are investing heavily. So that gives them the visibility that over the next 2 to 3 years there are each segment is giving them good growth drivers, and we think that they will be able to generate good revenue and profits. In fact, the company has given the guidance that they want to double their EBITDA in the next 5 years. The largest company is giving us the guidance that they want to double their EBITDA in the next 5 years. So obviously there is a lot of growth triggers which they saw, and that's why they have announced that in the as a target in their AGM, and that's why we continue to like this company. Stock has corrected from its size, and now it is available at the attractive valuations.
Wow, I think this is beautiful because just around Diwali we saw huge correction and everything's going to be available at attractive rates, or else everything was a bit stretched. So that is very interesting. We have one of the biggest Indian banks as well as one of the recommendations, which is State Bank of India. 733 to 813, and 960 is the target in the Samvat.
Right. So State Bank of India, the oldest and the largest bank of India, and being the oldest and largest, but the beauty is that they also have invested heavily into technology, and they have the apps like digital platforms like Uno, and the Uno 2.0 is also now coming this year, where they are going to cover lot more industries and lot more segments. So we are expecting a lot of growth. About 7.8 crore users they already have on this platform. So about 7.8 crore people interact with this bank online. So earlier we had a valuation discount of a public sector bank compared to private sector bank, because the many people thought that the services from public sector banks were not good. If you go to a bank branch and if you try to get some service, you don't get it. But the beauty of technology is that once you have an app, whether it is a private sector app or a public sector app, you get same kind of service. And that's why we are getting a lot of traction in valuation of a lot of public sector banks. This again available at about 1.8 times next year's book value, adjusted book value, and that's why we have chosen this. 960 is our target, and as I've explained, as the interest rates come down, the growth opportunity for banks will be there to benefit from the growth. If GDP were to go up, obviously the financial services has to do well, and when financial services as a segment will do well, largest public sector bank has to do well, and that's why we have chosen this one.
Okay, so I think this is the summary slide of the entire Samvat Picks 2024. So first of all, Devars, I want to just shout out here, right? First of all, this Moneyfest 2024 report is very, very, very interesting, and I'll tell you why. From what I've understood from how much you've spoken till now, right, about the 10 picks. Now, usually in the market, we run behind FOMO companies, we run behind what people are talking about. But from what I saw from the picks that you have, yes, they are in the large cap and mid cap space, but also I think 90% of them were attractive with respect to valuation, right? And I would say at this market, in the bull run kind of a market, all these valuations were lower, right? I would only say that Naveen Florin maybe was on the slightly higher end, but obviously they have good growth triggers kicking in, and the future EPS and valuation can be adjusted. But everyone else was attractive, was at very, very, very attractive valuations. And second, I think the way you analyze macro, right, and adjust it onto micro, like for example you spoke about China, you spoke about the cement industry picking up in certain regions, which will increase the price, which will do that. That is something that even me as a retail investor don't go too deep into it, because we usually wait for the quarter result to come, then take a call on it, then do deep dive research on it. So I just like a 1 second I want to just talk about that it was amazing. And this is something that is very, very, very interesting, right? And I think you guys also have a lot of different analysts that is also there, and you have you have a different, almost a different analyst in each and every company that you have picked, with very good qualifications as well, right? So Devarsh, before we end this entire episode, any advice you have for the retail investors who are investing in this market?
Right, so market is consolidating. It is going through a bit of a soft pitch, and that's why, as you see on the screen, we have given a buy range for all these 10 stocks. These are well-known, well-discovered stocks available at an attractive valuation, and we are giving you a buy range. So do not rush and just buy all these 10 stocks tomorrow morning. Buy Do a proper asset allocation, allocate fixed amount of money into all these 10 stocks, buy half of them now, and when the prices become little more attractive, when the buy range is there, you accumulate these stocks at the lower range. And once we have a good entry point, once we are past this soft patch in the market, and once the next year again the rally is resumed, we'll be able to see targets in most of these stocks.
So I think, guys, that wraps up today's Diwali special podcast episode, which was by Manifest. So again, Devers, first of all, from the bottom of my heart, I really want to thank you for being here. During this period of Diwali, and mainly educating me and a lot of people in the community who are watching this.
Thank you, Shashank, for kind words. It was pleasure doing this podcast with you, and I love to come back and we'll do chat some other day for some other topic.
If you like the video, click on the like button, subscribe this entire episode, and also put in the comment section what was your favorite part of this entire podcast, right?